Meantime, let's talk about what's going on with New York Community Bancorp, because the shares, they are rising after the bank raised more than $1 billion from a group of investors. Who's on that list? Well, it includes former Treasury Secretary Steven Mnuchin. For that story, we're going to get over to Leslie Picker, who joins us with more on all of it. Leslie.
Hey, good morning, Andrew. Yeah, that news stabilizing the stock for now. After a roller coaster day yesterday, the capital infusion inked at $2 per share, a premium to the intraday trough, but lower than any price NYCB has closed since the mid-90s. The group will also receive warrants with an exercise price of $2.50. So quite dilutive for existing shareholders, but perhaps better than the alternative that at least some investors had been pricing in, which was failure. I'm told by sources close to this one that the price was decided intraday yesterday, although Mnuchin has been diligencing NYCB for a while now, weeks if not months. A select group of co-investors were approached on Sunday to join him, I'm told. The deal comes with a refreshed board and C-suite as well, installing former comptroller of the currency Joseph Otting in that role. It's a known playbook for Mnuchin, who bought the failing mortgage lender IndyMac during the financial crisis when he also placed Otting in the top job. IndyMac was ultimately rebranded as One West and sold about 9 years ago. The NYCB transaction is expected to close on March 11th, subject to unspecified closing conditions. NYCB is holding a conference call this morning at 8 a.m. Eastern time to discuss the deal. So we'll be focused on whether there's any new strategic plan, as well as an update on deposit levels. Andrew.
Leslie, can you sort of take us behind the scenes, a little bit of how this all happened?
Yeah, so it's my understanding that Secretary Mnuchin has been looking at this one for quite some time now, weeks, if not months. He's been diligencing, looking at all of the various aspects and some of the key questions surrounding this deal in terms of credit quality, what's going on with their commercial real estate book. And ultimately, he became confident enough to invest about $450 million. Now, I am told that Jefferies, which was the banker that's been kind of placing this deal, reached out to other co-investors to join him on Sunday. So there was some back and forth in the 4 days between Sunday and ultimately when that deal was signed. But I'm told that that negotiated $2 per share price came as shares fell below that level on an intraday basis yesterday. And of course, that came after the Wall Street Journal and Reuters had some headlines out saying that New York Community Bancorp was seeking a capital infusion. So kind of interesting how this all came together. I'm sure there will be lots of questions about that on the call today in just about an hour and a half, a little under an hour and a half.
Hey, Leslie, I was reading about how some of the put activity suggested that, Wall Street's not completely convinced that this is going to fix everything. Just watching some of the options actions, some of the trading and the amounts that were bet on that. What will people be watching next? What are the signs that tell us whether $1 billion fixes things?
Yeah, I saw that too. I think Ben Emons had a good note on that. I think one of the key things it has to do with their reserves. They obviously had some skyrocketing reserves in their fourth quarter earnings that created a surprise loss, caused them to slash the dividend. So I think there's a lot of questions about how much of those reserves do they need to, set aside even more? Are they able to release some reserves? I saw an analyst note this morning that's had the number at about $350 million. If they were able to release that much, which is a large amount for them, that would put them back in line with peers as it pertains to a certain metric on return on capital. So I think that's kind of the key question is, what does the credit quality look like? Do they need to continue to set aside more? Because if you remember, last week they had that material weakness on internal controls as it pertained to loan review. That review is still ongoing. So have they found anything more? And what does that do for, their reserves, their provisions that could impact future earnings potential?